So anyways, I apologize. Welcome to Forex.Today, the YouTube community of 19,500 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans for today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I got crimson on. Today. I had to throw this on quickly. All of a sudden, I'm like, I had 5 seconds to get dressed. So anyways, guess what? I reached out and there's crimson stuff in my closet. Oh, really? In case you didn't know. Anyways, there you go. Huh? True Harvard man. So anyways, thank you for being here. Let me know how it can help. That's the whole raison d'etre. The reason for being is I can share some of the good and some of the bad I've learned over the years. Hopefully you can take it for what it's worth, and maybe it can supplement your learning. I believe in my book, I say you can get 4 times the experience trading Forex if you do it right. So if you think about it, if I've traded for 20 years and in maybe 20 weeks, you can learn 90% of everything I learned over 20 years, then you're at an advantage. Think of it that way. In 20 weeks, you might be able to learn what I learned over 20 years. Now, you might not have experienced it, but let me tell you, when I started, there were no gurus, there were no books, there were no training videos. YouTube hadn't even been invented yet. Think about that. Amazon.com wasn't invented yet. So there was no way to have the knowledge of, even technical analysis was considered voodoo. So long story short, there was nothing, no help, no resources, no nothing. And I couldn't stand on the shoulder of a giant and see. Okay? So it was more like stuck in the mud was how you had to learn. Just imagine weeks of just trying to figure things out. Months, years of just trying to figure out the basics. And you walk in and you're like, yeah, I already know all that. Cool. Well, good for you. All right? So let me know how I can help. That's what I want to do. I want to help. Ask questions, I'll help. If you prefer reading books, the link is in the description below to my book, Strategic and Tactical Forex Trading. Don't worry, I'm not pitching that so I can get rich. I make less than $5 a book, and that's on an $85 book or $75, whatever they're charging. None of that's up to me. None of that's up to me. I sold the rights to that book when it got published, right? That's owned by Wiley. So where does all the money go? I don't know where the money goes. So I'm not pitching that to get rich. I'm pitching that because I did put a lot of work in there, and I think there's a lot of honesty in that book. So anyways, buy it, don't buy it, makes no difference to me. But a lot of people like to learn from books. Great. Also in the description below is a link to free training videos on YouTube, youtube.com/FXBootcamp. And I think you'll find them helpful. That's it. Fibonacci, moving averages, oscillators, so on and so forth. I think that'll be helpful. If you like that style of learning, you're like, man, this was great. Then there are premium videos that cost $88 a year for 65 hours of videos, many of which I would say are like approachable yet college level quality education. Not some kid in punk that just sort of figured things out and has their point of view. But you'll learn real solid technical analysis, real solid fundamental analysis. In a way, you're borrowing from an education that I spent 6 figures on, and you're paying $88. And you're learning some stuff, literally learning some stuff I learned at Harvard. Okay, where a textbooks for a Harvard or let's say any college level economics course are probably $500. So the entirety of all the videos cost significantly less than one college textbook. So think of it that way. Like, obviously, I'm not pitching that to get rich quick. Otherwise, I'd price it for $1,000 and you'd still be happy. It's $88. So anyways, all that kind of stuff. All those links are in the description below. There's a link to Trader's Way. I want you to click the link and open up a demo account and give Trader's Way an opportunity to earn your loyalty and respect. And then the little beast in your psyche says, "Oh, he's just saying that. So if I click the link, he's gonna make commissions on my trades." No, that's not true. It's not true. Click the link. Don't click the link. I don't care. I'm recommending Trader's Way because you need a trustworthy broker that actually executes your trades. That's the first thing. The second thing is those trades should be executed quickly. The third thing is if you are owed a swap, you should be paid the swap. And then all of this shouldn't cost too much. The spreads should be reasonable because this is a competitive business. And when you put all of that together, Trader's Way scores incredibly high, and therefore I recommend them to you. Click the link, don't click the link. Just go to Trader's Way. You see? Honesty and integrity. Let me know how I can help, man. Think of this. I've been doing these live streams for decades, every day. I rarely take a day off. I took a day off just recently because I finally got my 20. This means I'm a Harvard grad and I graduated in 1920. I had about 5 people congratulate me on my children graduating. And then I show up on graduation day and I'm the one wearing the gown. But in the airport, I wear this hat. People are like, "Oh, good. When's your kid's graduation?" Because obviously I didn't graduate in 1920, and obviously I didn't graduate in 2020. Or did I? Yeah. So anyways, just funny. What a funny life, man. What a funny life. Edward says, "Nice Bell and Ross." You like that? The BNR? Yeah. I've been buying, I don't like big watches, except I can't see anymore, right? So I need watches. So I have a Panerai and this BNR that are just huge dials with huge numbers on them and huge hands. And so I can see them without wearing glasses. Huh? That's what happens. Happens. I'm telling you guys, you young bucks, tell you, you're going to wake up one day and you're like, "I must be 45 because I can't read my watch." Uh-huh. One day you're going to pull out your cell phone so you can see the bill that your waitress just gave you. You just wait. All right. So here he is and here we shall be. Let's take a look at the indices. But by the way, Edward knows his watches. Most people wouldn't even know. And you caught that just, yeah. Good for you, man. That's good. That's a good call. All right. So Aussie still strong. China open. Euro strong, maybe benefiting from a short-term weakening U.S. dollar. Kitty cat up. Okay, kitty cat up. Yen down. Swissy up. Kiwi up. Pound all over the place. All right, so what do we got here? Let's break this down into digestible pieces. Pound all over the place. Why? High inflation. And the Bank of England expects employment to fall and unemployment to rise. And they expect recession. In fact, they've actually said it. It's not like, "Oh, yeah, we could." No, they say they're going to go into recession. So that none of that is good for the great big pig. Okay, what else do we read here? How do you read the tea leaves? Dollar predominantly down, yen very much down. What does that mean? Risk on. What does that mean? Well, typically it means exports. Well, I mean, it means different things for different countries, actually. So I should say it this way. When the dollar's weak, people want to buy a new car in America. When the dollar's weak, it's not that it's when it's weak. Let's change the tone here. An American wakes up and says, I like my new job. My new boss is great. And that new promotion they just gave me is excellent. I think I'll work at this company forever. And I feel very secure with my job. And I'm making a little bit more money than I used to. And I expect to continue to do so. By the way, you have all of that psychology is important. It changes behavior. So when you study behavioral finance, the first thing you're going to learn is bias, and then from there, behavior. Okay? So part of this is a bias in the sense that you feel secure and you feel wealthy, the household wealth effect. Okay. So because of all this, you're like, I'm going to buy a new car. And you're going to decide, do you want to buy an Acura or a BMW? So you go and you test drive both and you make a decision and you buy it. Which one? Doesn't matter. So if you bought the BMW, the euro goes up, the dollar goes down. If you buy the Acura, the dollar goes down and the yen goes up. Either way, the dollar weakens. You're exporting dollars to the Bureau of International Settlements. And by the way, I covered this in the day trading group last night, so I won't go too much detail again. But your dollar goes to the Bureau of International Settlements. Actually, it goes to your central bank. So in this case, the Fed. And then the Fed sends it to the Bureau of International Settlements. And then eventually it gets converted either into euro or into yen. But either way, it don't matter none. The dollar weakened. You're exporting dollars and importing a car. Just always think about that. So if Americans are importing stuff from foreigners, they're exporting their dollar, and exporting dollar weakens the currency. Cool. So dollar down is good. Okay. So it kind of matters now if these things are down, very often other things are up. Other things, if we're talking about global macroeconomic activity expansion. It's a lot of words. Global macroeconomic activity expansion. Global growth. That'll push up commodities like Aussie and CAD. And typically, if it's because of growth in economic activity globally, dollar would be weak and yen would be weak. So anyway, so you might want to carry that through into some trades. Now, the next thing that you might want to look at is for every single one of these countries, do import-export analysis. And we did that in the day trading group last night, at least for the dollar. And we used not the standard measure of GDP. We did a non-standard, what's considered high-frequency data. Let's see if there's an official definition of that. High frequency economic data. Do they have a definition? What is high-frequency data? High-frequency data is any kind of data available more frequently than typically monthly data. Okay, so it's non-high frequency. Such as jobs report from the BLS, which would be weekly. Okay, no, it's not actually. So we did not analyze high-frequency data. But let's say an alternative source to import-export data. Great, fine. You can use any measure you want for that. So you can then make a decision on what you think with dollar. Okay? So the interesting thing, okay, is that the dollar has been weak recently, but not for months, but for a couple of weeks. But analysis of this data suggested that there's pretty decent rationale, although it's backward looking, to suggest that there's pretty decent rationale for dollar strength still. Right, Greg? Okay. So we get ourselves in a situation where you need to choose. Okay. Dollar weakness suggests, generally speaking, risk on, stock market's going up, commodities going up. Okay. Now, typically what I teach you is if dollar is strong, that means the opposite, doesn't it? Economic contraction, stock market down, so on and so forth. And that is still generally true. Let's say probably 99% of the time. But what if this is a 1% difference? What if right now is different? Let me explain. If exports are up and imports are down, okay, what does this mean for the dollar? Okay, here we go. I want everybody here to answer. If exports are up, what does it mean for the dollar? Just exports now. Because the study of economics, you have to get numbers for both of these and relative change for both of these. And even though eventually it becomes indeterminate, but you can guess. Okay, it's indeterminate, but you're like, well, maybe this goes up versus that goes down, but you can't really tell by how much. Okay. So if we are exporting wheat, we get paid in dollars, but foreigners don't have dollars. So they have to first buy dollars and then give Lucas their dollars for his sorghum. Got it? Yeah, everyone's like, who's Lucas? Lucas is the best farmer in the world. He might be the youngest. The average age of a farmer in the United States is 58. So in 10 years, there won't be any farmers in America. And it's scary as hell, actually. Hey, Maida. All right. What happens to the dollar if imports are falling? Robots will do the job. I think we'll get there. It'll be such a radical change, though, and it'll probably happen. It'll need to happen quickly. And wouldn't it be interesting if it was all Mr. Musk? Okay. Okay. If imports are falling, what does this mean? There's a change. Okay. What is it? Old minus new over new. Is that the formula? I always mix this up. New versus old over old? No. Old minus new over new? Yeah, Lucas, it is. But I suppose it was an inevitable and necessary. But yeah. No, I get it. I totally get it. But we're going to pay the penalty, I think. I think in 200 years, we're all going to be eating some factory-made nutritious mold that will give us all the nutrition we need, but there will be... Anyways. Okay. All right. Oh, is that right, Greg? Greg says a nice thing about YouTube is farmers can explain businesses and how they're making the change. Yeah. Look at our once vibrant communities. Yeah, but and that's been going on for a long time though too, hasn't it? I mean, I grew up in Saskatchewan where it's nothing but small little towns around the old grain elevators. But we went decades without the grain elevators actually being used, and now all the grain elevators are gone. I'm like, really? They're not there anymore, and I get it. But you know what? The one thing that's never changed is things are always changing. Okay. So, anyways, all right. So the reason I say this is you can't just take this what I'm explaining here in static, because there's only exports minus imports. So you want to look at relative change. And so when I say down, let's say less than normal amount of imports. Because if you're importing, you're weakening the dollar. But if you're importing less, then relative to what you normally would do, it's less weak, which is a form of positive, strong, right? Now, it's still, exporting still weak, but relative to normal levels, the dollar's unusually strong for let's say, this time of year. Okay? Okay? So, in this case, let me put it back to blue, right? So, if imports are down relative to normal, and exports are up relative to normal, both lead to a strong USD. And therefore, let's say you felt like the stock market's getting better, the economy is getting better, China is opening up, and that's really good. But you would expect under these circumstances, because 99% of the time when you get nothing but good numbers, the US dollar weakens. So then you're like, so why are we doing this? And the reason for it is, let me explain it this way. Americans in this situation are making money. Okay, USD up. Okay, Americans are rich. So they want to buy stuff. So they go to the store and the shelves are empty. Which is another way of saying is imports are down because you can't get anything to buy. There's nothing out there to import. Okay? Think of it that way. There's nothing to import. So you got money, and foreigners don't got stuff. So you go and you buy something local. Okay? Home or away. And so you spend stuff locally. You go to Florida and you sit on a beach and you have a margarita. And you're like, well, Wayne, what about the tequila? All right. You sit on the beach and you drink a Corona. Hey, Wayne, well, what about the... Oh, wait. Well, what else do you do on a beach in Florida? I have no idea. If you're not drinking margaritas and drinking Coronas. You're just not doing it right. But anyways, imagine you're drinking some local drink. Anyways, that money stays there. The money stays to the hotel. You tip the waitress. All the money stays locally, and you're not importing because there's nothing to import. Okay, but meanwhile, American exports, I don't know if they're up in terms of units. I don't know if we're exporting more wheat, more beef, more timber, more gold, more professional services per unit. I don't know. I don't really know. Oh, a mojito. Yeah. Mojitos are great. Okay. So anyways, so I don't know if the number of units, but prices are up. So let's say prices are up on average 50%, but some of them are up 100%. But let's just say you average it all out. Then exports are up 50% in terms of dollars. Exports. Remember, that means we have 50% more revenue, more dollars coming into the country. Where did the foreigners get it? Their central bank, who then got it from the Bureau of International Settlements. They don't actually get it from the Bureau of International Settlements, so I guess I should stop being so confusing, because you'll get some central banks out there, like Sri Lanka or Turkey, where they don't have any dollars. So normally it's not a big deal. So we can see now in terms of dollars, because export prices are up, Americans are doing well. Well, what about the central banks that are not doing well? Okay. So Turkey and Sri Lanka owe debt. They have loans in US dollars. Normally this is not a big problem. Okay, let's say you're 6'4". Oh, sorry, you might be a European. All right. You're 2 meters tall, which means you're Dutch. Okay? And you owe some debt in dollars. And you're like, not a problem. So you pay it, and it goes to the ECB, who converts your euros to dollars. You get the exchange rate, and it's done. It's the whole reason you want to have dollars, a reserve currency, because everything can get converted to dollars. That's why you want to keep it in reserve. Central banks keep these things in reserve. And because everything is priced globally in dollars, well, the Central Bank of Europe, the ECB, keeps a lot of dollars in its vault because it's easy, because they constantly want to convert it to dollar. And the conversion is easy and fairly cheap. And that there's no problem where the Dutch business person, 2 meters tall, could go visit their Dutch banker, who's also 2 meters tall, and like, hey, I need to pay this loan in dollars. Not a problem. Done. Okay? Now, if you're Turkey or you're Sri Lanka and you owe the debt in dollars, what happens? Their central bank doesn't have dollars in their vault. They don't have euros in their vault. Why? They're not doing business with America, and they're not doing business with Europe. And therefore, they found maybe they didn't need or couldn't afford to keep these currencies in reserve. But now there's a currency crisis, okay? Because the Sri Lankan needs to pay this debt, so they go to the bank and they're like, okay, I need you to wire some money to pay for this debt. And they're like, well, we don't have that money. So now you have to go into the interbanking system, which means two things happen. Okay? That transaction pushes dollar up, but pushes the local currency down. Okay? Which means the next time you have to pay it, you have to sell even more currency, because the local currency is down, to get your dollars, which weakens it further. So therefore, the next person or the next transaction you do, You have to sell even more local currency to buy the same amount of dollar. And what happens is your currency keeps falling and falling and falling. And therefore, let's say you pay your debt down by 5%, but your currency falls by 5%, which means your debt in terms of your local currency hasn't changed. So you just keep paying and paying and paying and paying, and you still owe more and more and more and more in terms of your local currency. Okay, so think of it this way. You have $1 million loan, and you pay some down, and you feel like you've paid down, so now you only own $950,000. But the thing is, now you need even more to get to the next payment, and therefore you're just treading water at best. So if you live in an economy right now somewhere in the world that does not participate in global macroeconomics, you are poor. Hey, don't get mad at me. Get mad at your politicians. Okay? Caipirinha. Thank you, Peter, for sure. Kinshasa, I think, is what you need for that. Yeah, that's a good one. But again, now you're just doing Brazilian real, the real, as they say. So if you live in a country that doesn't participate in the global economy, you're probably a socialist pig dog, and you need to replace your government with a government that celebrates individual freedoms and creativity, to say, yes, if you want to be unique and special, we will reward it if it is productive. Peter says, or vodka. How dare you, Peter? You never put vodka in a caipirinha. Oh, I'd rather die. You just change the name. Call it something else. All right. Liberalist. Yes. Well, the right. Right. And the funny thing about America being a rich country, you think of a liberal and it's, a white guy with a blonde ponytail and a goatee, celebrating his individual freedoms. Oh, I can be a hippie if I want to, Okay, that's cool. But in another country, you just work down in a cave with a pickaxe and you just have a number and you don't have a name. And it's all about the social good, the many over the one, the needs of everybody over your individualism. And I'm like, no, I don't like that. A capitalist says, go out if you want to change the world, if you want to rock the world, if you want to destroy everything that's happening now and build something better, we'll make you a billionaire. And you can do whatever you want. You can buy Twitter and then tweet everybody. It doesn't matter. Build rockets, build self-driving cars, do the impossible, and we will reward you. You can be unique. But I think the American version of liberalism is because the country is still filthy, stinking rich. And then in other places, everybody is equally poor. Except the one guy that's not poor, how did he do it? He stole it from the masses. Okay? That's it. Capitalism rewards productivity. And the other countries, though, that one dude, the 1%, how did they make their money? They stole it from the 99%. Now, you might say, well, Wayne, it's the same thing in America. I would argue against that, but this is probably the wrong time for that, but I'd say no. But anyways. Okay. JK Ministry says, how do I know if a country's in recession? Probably 2 quarters of negative growth. Okay. So anyways, whatever. We get back to this. So if you live in a country that doesn't participate in the global market, meaning you have a central bank that doesn't hold foreign currencies, you will be poor. There's not one case in the history of the world where closed borders and no trade has ever increased standard of living. That's a hell of a statement. Let me say it again. There's no situation ever in history, and I've studied thousands of years of economic data, there's never a case where closed borders and no local trade, no global trade, no trade, closed borders. Your currency doesn't trade internationally. You don't buy stuff from foreigners. You don't sell stuff to foreigners. There's never a situation where that has ever increased the standard of living. So if you reverse it, okay, you want to live in a country that has a central bank with a lot of foreign currency in its vaults. Dollars and euros and yens or yuans, so on and so forth, right? Why? How did they get this money if this is a foreign central bank? Like, let's say this is Brazil or something. Because you're selling some of your stuff to America. You're selling some of your stuff to Europe. You're selling your stuff to Japan. And you got to remember, Americans came over to you, Brazil, and said, hey, we want to buy some Kansasha. I can't even say it. Right? And so they gave the central bank dollars, got converted into local currency, real. Okay? Boom. Now they have dollars because they gave the Americans their local currency, and then the Americans gave it to complete the transaction. Europeans did something similar. The Japanese did something similar. And so the problem with the central bank is they just have so much foreign currency. They're drowning in this stuff. Or, as Greg says, you're Argentina and you don't got jack. Okay? Anurag says, hey, sir, if in the future, if crypto will replace the currency system, how will this affect the entire world? Doesn't matter. Don't get caught on that. What we want to do is we want to make money today. Tomorrow's non-farm payroll, so we got to worry about that, and then we got to worry about next week. You got significantly more important things to worry about than that. Now, going out 25 years, maybe even 10 years, we could have some radical changes, and almost certainly. But don't worry about that today. It's too big. It's too vague. Okay? What I'm talking about is it doesn't matter what currency we use. What matters is that we're trading together. And that your standard of living is going up because of me, and my standard of living is going up because of you, and therefore you're not likely to kill me, and I'm not likely to kill you, and we live in some level of symbiotic happiness. But you close the border, and your standard of living doesn't go up. Okay, like a great case study would be look at Latin and like South America and Central America. Okay, go back and study over the last couple 100 years. Okay, you'll see changes made in their economies that have hurt. Argentina, again, is a classic example. Right before World War I, Argentina was, I think, the 12th richest country in the world. It had a per capita GDP equal to Canada. And so you would say, well, if the per capita GDP of Canada, if it's increased over that period, let's say 100 years, then Argentina would be about the same, maybe a little more. Maybe it's a little richer, maybe it's a little poorer, but about, you could say about, because the countries are similar in some ways, mostly that it's a natural resource type, right? A natural resource country. And of course, technology and other things could have happened over those years as well that maybe could have changed that into something different. The one, we can't. But nonetheless, they should be about the same. Constructs as rich as Argentina. Well, also, Buenos Aires was considered the Paris of South America. It was rich. It was beautiful. It was educated and artistic, and the center of fashion and culture. It was rich in many ways. And, well, let's just say it's not as rich as Canada anymore. Okay? And I know a few Argentines. They're cool people. They have class and culture. It's all still there. So I would say the people are, at least the ones I know, are still cool, sophisticated, cultured people. But maybe the socialist pig dog government sucks and has ruined everything over generations. Maybe. I don't know. Is that right? Construct, that's interesting. Yeah. Rich as an Argentine. That's interesting. Yeah. Yeah. And it was also a place to go if you were rich. Because then you're like, well, you can ski, you could have a huge ranch, you have fabulous wine and polo and, and the cafes in Buenos Aires and opera, and it had everything, right? So you would go there not just to become rich, but you went there because you were rich and it was such a beautiful place to be. Yeah. Anyways. Oh, I'm sure Construct. Yeah. Right. So the gauchos were great. Southern Brazil, very similar. Yeah, I think it all starts around Porto Alegre and south of Porto Alegre. Right? Uruguay, Paraguay, and then Argentina all in there. Yeah, it's a great part of the world. Obviously, the beef is just unbelievably fantastic. If you're in southern Brazil, though, don't drink the wine. Drink Argentine wine. But yeah. So anyways, going back, thank you for the history discussion, everybody. All right. So what where we kind of left it off is you need to decide what you think is happening here. Is there a change in the dollar? And is it due to just risk on? Is it due to simply the stock market going up? Is it the classic model? Well, what I described last night in the day trading group, just so you get a sense of what we do, is I said, well, if you're a bull and that is your decision, that this is risk on, the stock market's going to go up, Bitcoin's going to go up, all that kind of stuff. Okay, then the basis of your scenario would be to buy that. And in fact, I highlighted all of this, right? If you're only doing it now, you're just too late. You are just too late, whatever. So anyway, so you got this as a basis, or literally a base. Construct. Oh, yeah. Chile. You know what I like is Carmenere, and I haven't had Carmenere actually in several years. I should probably put that on my list. Big supporter from Ethiopia. Whoop, whoop. Awesome. Thank you, Trade. So anyway, so this idea here is, okay, the basis of your trade plan. And you would be done now. You should have traded this a long time ago. And your stop is probably at break even. And this is a pretty decent time to pray. It's not going to hurt. Do you know the story of Carmenere? Yes. And I believe I know your story of Carmenere, but it's the reason, the age of the vines is why I love it. And I discovered Carmenere probably, gee whiz, 30 years ago. And it was very difficult to get, but it was so fantastic and it was so cheap. Now I get pissed off I'm in the stores because I'm a Forex trader and I know the exchange rates. I'm like, why is this a $20 bottle of Carmenere? Why isn't it $5? And I guess the answer is because, dumbass Americans will pay the $20. So they'll sell it for what the market will bear. So $20 for Carmenere, but if you do the exchange rate, it's probably $5. But anyways. So there's that. You are basically, your idea is risk on. Oops. Okay. Now, what if you are still like things are good, but it's not a risk on part of your plan. It's exports minus imports is the basis of your plan. What's the difference? Well, then you'd say, well, there is growth here. Maybe euro's not the best one. But nonetheless, if you're doing exports minus imports, and you say, well, then dollar should be strong. See, risk on means dollar down. Okay? Dollar down. Exports minus imports, at least up until recently, because remember, we're looking at economic data from the past. Well, that says dollar up. We're exporting more than we import because we can't import anything, but the stuff we export is up 50 to 100%. So, of course, in dollar terms, okay, we're making more dollars, so the dollar goes up. So you'd say, oh, well, that's easy, Wayne. I'm going to sell a double top, and I'm going to take this down. You see how easy this is? It's easy. Now, I don't know if you're going to make money, but what you should do is make a decision on what you believe is the reality. Is it risk on because Americans can afford to buy more from foreigners? Okay, well then imports are up. But you're kind of looking forward where you're like, well, imports are not up yet, but they will be. But think about that. Part of what you're saying, okay, we all have to decide. Imports, are they up or are they down? And not just now, but next month, next quarter, the rest of the year. Are imports up or down? And then relative to how much we're exporting. Are we going to export more next month? Are we going to export more next quarter? Are we going to export more in between now and the end of the year? Or if you fix this, and by the way, you can do it like that, okay? If exports are fixed, but the dollar changes value, or the price change, we'll call this price, the number of dollars, okay? But the units, the same amount of wheat gets sold, but wheat prices fall, then exports fall, which means foreigners need less dollars to buy the wheat. Therefore, relative to standard or where we were, there's less demand for the currency and therefore less strength. So no matter if you look at this as risk on or off, what you're saying is imports, demand for imports. If it's risk off, you feel poor. So you buy less stuff. In this case, less stuff for foreigners. But, what percentage of things at a Walmart is American? Oh my God, I have so many animals in my yard right now. Well, not the workers. I have geese and baby geese. They're everywhere and they're trying to get out. I got to get out of here. I got animals and men. Animals and men don't mix. Anyways, risk on, risk off. Okay. And so in terms of dollars and all this kind of stuff, or you're just measuring at X minus M, both are the same. But you can come up with completely different theories. And all I was trying to say is you could rationalize this. Rationalize, mean you can give me math and explain why this is happening. Or you can give me math and say this is happening. And I believe if you're an amateur, you don't know jack about what the hell is going on and you're making it up as you go. That's okay. We were all there. Now, somebody left a comment the other day. They're like, I'm becoming a millionaire trading Forex, and I don't understand why you need to know why. Well, I suppose you don't, and I'm not poo-pooing on those that just do technical analysis. I love technical analysis, and I love the fact, I think it was Reb, who's been, part of our community for many, many years. And I think it was Reb that said, hey, man, I'm becoming a self-made millionaire, and I don't understand why we need to know all this stuff. And maybe you don't. Maybe it's just me. But I think you should have a healthy understanding of both technical and fundamental analysis. I'm not trying to say fundamentals are the only way. Seasonality is the only way. I can see that this is important. But what I also believe, what I also believe is it can be helpful to try to have a forward-looking guidance for your own trading. Okay? Okay? Okay, I think I need to go, but I see JK says, you promised to talk a little bit about market integrity. I don't think that was me, because that's not the language. That language, this idea of market integrity and all that kind of stuff. Now, Ryan at FX Bootcamp uses that language a lot more than me, but I go all the way back to, again, there was no books, no YouTube, no Amazon.com, there was no language like there is now, like this idea. I hear it all the time now, like market integrity and all that. Market structure is the other, but that's not the language I use, only because that wasn't then. So that's a more modern use of language, and I just don't speak that way. So that's why I don't believe it's me that said it. And therefore, because let's say what I do is probably no different from any of that. It's just not the language I use, because I didn't read that in a book. I didn't take someone else's training, all that kind of stuff. I'm self-taught, but I would, having seen a little bit of everything over the years, it's very much the same, but it's not my language. So anyways, but I really do got to go. Yes, I got 25 men out there, but I got about 50 geese, and they're all trying to get through, and there's baby geese and all this, and they get in panic and all that kind of stuff. So like there's a true shit show going on at the McDonald Manor today. Okay. Acres and acres of chaos. So I'll bid you adieu. Tomorrow I'm at FX Street, which is youtube.com/FX Street, for Trade Non-Farm Payrolls Live. More than 16 years of doing that one webinar. Okay. But just pay attention. Commodities have been up. Okay. Yeah, first world problem. I know. Which is good. Okay. I mean, I recommend it. A, live in a first world, and B, have first world problems. Oh, we're going to have to build another garage for the Lambos. Yep, I gotcha. But anyways, pay attention to commodities. A lot of this is to do with the China Open. Plan all that out. Remember, volume and volatility is probably going to fizzle out a little bit later today. And then we got non-farm payrolls tomorrow, which is great. So you can attend that. and then regroup Monday. So if you're in my day trading group, we're going to meet Sunday night and set up all our trades for next week and all that kind of stuff. Okay? All that kind of stuff. Find time to come to India. I love India, and it's been a long time since I've been to India. I've been all over north and northwest, right? Rajasthan, Punjab, obviously been to Agra, obviously, because, everyone has, so on and so forth. But South India is probably I'm ready for. And I know a billionaire in Mumbai, and I'm like, there's someone that you want to show up on his doorstep. This is like, hey, I came to visit, right? So anyways, maybe I'll fly into Mumbai, work my way south, right? If I do that, then you got to go to Goa. Oh, Jaipur! Yeah, Jaipur is nice, huh? The Pink City. Hot. No, Jaipur is great. Yeah, small world, huh? Yeah. 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 Goa would be nice. But then I want to, you got to see, there's some beautiful temples down there and stuff. So cool. All right, cool. So anyways, what a wonderful world we live in. I think the solution to many of our global problems, social problems, economic and income disparity is global trade, which is a fancy way of saying if we play nice together, on the balance, everyone is better off. The fastest way of peace on earth is sharing and working together, and capitalism promotes that. It removes the borders. It kills the king. Okay, yes, the CEO of the company is going to make too much money and live a godlike life, but nothing prevents that from being you. But on par when it comes to every person's standard of living and health and education and happiness, capitalism leads to sharing and working well together and being nice together. And so that's why I'm a capitalist pig dog, because I believe it's the fastest and easiest path to peace. And I hope we all get there soon. I'll see you tomorrow. Cheers.